365, shake my hand and welcome to another video. Welcome to another 365 long-term wave analysis video. And in this video, I'm going to be breaking down, I think the pound CAD is the next asset we're looking at. But my goodness, we're putting in the work, guys. We are putting in the work. These are all the charts we've done so far in the last 2 weeks. Well, we'll be exact. But the first one was Euro USD. And if you go back to that chart right now, prices stepping up, right? So retail traders are more on the sell side again. So if we're lucky, we might get a push down. But if you just have to come here, it's exactly 2 weeks ago when I started this journey. We've got a lot of assets to look at right now, Euro, USD, pound, etc., going back up. And I have to thank everyone for watching. Those of you who are watching, I hope you're gaining value. I hope you're watching the most important thing, the art of repetition, the same strategy playing out, the same analysis playing out. You know, with a good trade on USD JPY already, right? And I did the USD JPY video almost 2 weeks ago. That played out last week. The gold buy played out, and with our gold video put out, you know, almost 2 weeks ago. All right. So these videos are not only relevant for the short-term trades I've been taking, but long-term. You really need to understand where price is going in the long term. So please do take some time to study the stuff. I am trying to keep it 20 minutes. 18 minutes, as short and as quick as possible just for you, right? So we're looking at pound CAD today. And yeah, I'm not going to waste any time. I'm going to talk to you straight about pound CAD. I don't like how I feel when I look at pound CAD. Like, I really don't like how I feel when I look at pound CAD. And normally when that happens, I generally move on with my life and I find money somewhere else, right? But let's see if today is going to be different. I see on my trading journal, I just wrote, I don't like how I feel when I look at it. So for me, that means something because I've been looking at charts for a very long time. And there's some charts that you just have to wait for the play. You just have to wait for the play. But there is pound CAD. Very, very much, big on institutional selling than buying. If you look at the major turning point of the 1980s is all the way up here, which was this beautiful strong supply that held price up. Right, then markets came back for it in 1998, right, and then markets have been kind of like dropping ever since. Markets tried to push up, and this was back in 2016, and we're dropping ever since. And so we can come up with a couple of characteristics of price here already. Looking at a 12-month chart, every single candlestick represents 1 full year. Banks think in 3 months, take profit in 1 year, in a 10-year span. We can look at the fractality of price, which is a repetition of price doing the same thing on different time frames. You can see that markets love to retrace and come back to retracement zones and create bigger supplies. And the last big retracement zone happened, and then price created a new supply in 2016. And now we are looking at an interesting play. The only thing that I don't like is the fact that, history is not repeating itself perfectly. So when price came last time, it trended upward, hit supply, went down. When it was now time to come back, trended upward, hit supply, went down. Now we have something new, right? When you have something new in price, you really want to study it, right? I'm happy to make money out of a breakout in this area, say 2 years from now when price is downtrend. But right now with this consolidation, we have to be very careful, right? Remember, markets in general, by the way, only trend about 30 to 40%. Look it up if you think I'm lying. Most of the time, there's a lot of sideways movement, and it also depends on the time frame. Depending on which time frame you're highly susceptible to, which time frame you're looking at, you will see this. But on higher time frames, you will see a lot of consolidation forms, PCP areas being formed, etc. And this takes time. You're looking at 1, 2, 3, 4, 5, 6, about 6 years, right? This is a 12-month chart. 6 years, where technically speaking, even though retail traders and institutional traders were buying and selling, this asset was technically just consolidating, just ranging for 6 years, right? So on the 12-month chart, I've established that, well, for me, small selling and buying is prone, more sell profile asset. We can see the last real demand in 1984-85 was taken out by probably the COVID stick. Oh no, it's not even COVID, it's 2022, last year, right? Completely smoked, right? So there's technically, for all intents purposes at the moment, no major turning point. If I remove all drawings, just to quickly show you something in a much more clearer format, you would agree with me, I'm sure, that right now, price has made its way back up to a supply. We look at the area of competition, right? We'll say the first touch was 2018, but there were multiple touches, 2019, 2020, 2021, etc. And then when we use our proximal line and ignore the area of competition, we still get a similar effect, 2018 at least, 2020 at least, and then massive consolidation to the downside, right? So we've got a supply in control if you were to just zone out the noise, right? So what you really want to be looking at is a long-term move to the downside. But I don't like how that feels, and I'll tell you why. Secrets alignment is key to successful trading, and we don't really have the greatest alignment, right? So let's just quickly put back all my zones so that I don't have to do all the work again. And then we're going to get down to breaking this baby down. Right, so my zones are back. Right, so we're going to jump to the 3 months chart right now. Perfect time for you to like the video. Perfect time for you to realize that we are purely all education, no lifestyle nonsense. What I drive is like literally got nothing to do with your trading, right? So you really need to get your mind right when it comes to trading. There's a big boy and big girls game, right? There's a lot of money here, and you must be attracted to knowledge if I'm even going to remotely play a role in your life as a mentor. Knowledge first, right? So there's a 3 month chart. On the 3 month chart, we have something interesting, right? So where price is right now, remember on the 12-month time frame, hasn't really arrived at a bigger supply, which is probably this block. So let's mark the 12-month supply with a red boundary, and you can see, I guess the proximal line would be here, right? So I'm going to make that red for later on, so that we are in the know, right? So anything above this red line is part of the 12-month supply, which is obviously making contact with another 12-month supply. Okay, fantastic. So we go to the 3 months time frame. Now look at where price is relative to that red boundary, right? It's absolutely far. And when we look left, we can see that markets have to deal with their own current situation right here, which is a presidential supply. But the way price arrived at this presidential supply is very, very parabolic, which becomes very, very problematic for sellers. If we draw the area of competition covering the whole week, you can see that there have been multiple test runs on this area of value, and prices going for the golden glass effect. If we draw the proximal line, still get similar strong buyers moving to the upside. And if you think about what a supply and demand curve would look like, well, given the data that you have in front of you, we're definitely well within the 0 to 25% bullish area, right? So there's strong bulls very much present in pound CAD at the moment, and we don't really know, what's going on. And by the way, I hope I remember when I'm editing this video to throw in a screen grab, but I lost a trade on oil, right? So oil, and it was such a dumb mistake. I made a seriously dumb mistake on a very small account, but nonetheless took a rookie loss, right? So if oil is technically going down, then we're going to get a weakness in CAD anyways, right? But it's just something to remember that on, I think last week Friday, oh no, Monday, this I'm making this video on Thursday, the 4th of May, but on Monday, the 1st of May, during the New York session, I got stopped out of a beautiful oil trade. Or was it Tuesday? I don't know. But it did happen, right? So you can see CAD is weakening if oil is weakening, etc., etc. And that's something to really kind of like keep in mind. I apologize, right? So if this weekly supply, 3 month supply, sorry, doesn't hold, if you look to the left side, this whole area is extremely choppy, right? You've got something here, right? Let me just remove everything I've just done. But you've got this area here, sure, but otherwise everything is just very choppy. if you look to the left, and price would have to succumb to something, right? So even if the supply that price is at right now, the 3 months time frame does not work, right? There's still a lot of sell pressure to the upside here, but clearly, these yellow zones that I have are from a governing time frame. So let's go down to the monthly time frame and see what that looks like, right? So here we are on the governing time frame, clean parabolic, a very beautiful, imbalance, value gaps, whatever you want to call it, etc. Markets getting rejected the first time, price building up, strong consolidations right here, all right, and then price shooting up. This is really an interesting take because either you're a seller or you're a buyer at this very moment. And if you're a buyer, you're a momentum buyer, right? Not just any type of buyer. You're not a buy low buyer. You're a momentum buyer, meaning you believe that price is going to break through the zone, or you're a textbook seller, right? I'm pretty sure, just looking at price, if I've looked at price long enough, I'm pretty sure somewhere here, if we're using indicators, somewhere here, the 50 moving average indicator would be looking something like that, getting ready to provide support, right? Maybe not on the 1 month chart, but definitely on the daily chart. But I'm pretty sure this is what it would look like, which would mean if we were to draw a vertical line, a horizontal line right across the charts now from where price is right now, and make it so that we can all see it. Let's make it white. Let's just there. Let's make it white there. I'm pretty sure we'll start to really see some consistency, right? Look at all those multiple rejections on this line, meaning it was a strong support area, and you could see the inverse, multiple rejections going to the upside, right, top side, a flow support area, right? And it could even more become painfully more clearer if we go to something like the daily time frame. It's just an assumption, but I'm pretty sure that's how indicators work, right? I'm pretty sure that's how indicators work. In fact, while we're wasting our time doing this, let's just quickly pop in an indicator, all right? So don't forget where my white line is. How do you do this? So indicator, then we're going to go moving averages. I don't really use indicators. I don't like indicators. I'm just showing you what most people's trading systems are going to be looking at, right? Okay. So this is the blue indicator. Now let's fix it because, I said 50. You heard me say 50. So I'm going to make that 50. Right. So now we've got a 50 moving average setup. Is that right? Yeah, it looks good. Press OK here. Right. Then let's go to the daily time frame now. Don't forget the white line. There you go. Boom. See, so on the because 50 is the 50 length is good for something like daily H4, a monthly chart something like 200. But you can see, right, that blue line that I first drew freehand, right, like there's some building support here, right into the supply zone, and that's going to become very important later on. I'm just going to delete that. Because if markets do want to break the supply on the governing time frame to edge a little bit higher, they need momentum buys. So I was just explaining the difference between buy lows and momentum buys. Momentum buys are you just keep adding to maintain the momentum, and that sometimes is a big institutional decision. On my side, I can't do any buying right now because a valid supply has been contacted, right? This is interesting. You see here where there were a lot of wicks and a lot of rejections earlier on, right? You would want to draw a Fibonacci and see what price looks like there. But unfortunately, right now, we don't have a swing low, right? And we're in the month of May. So let's look carefully now and let's think logically about what's in front of us. Today is the 4th of May and I'm making this video. Look at how big and bold and strong, this candlestick is on the month of May. Where does my Fibonacci start, right? Okay, there we go. Right. So I just want to make sure I've got my swing low marked properly. There we go. Right now, sorry, I was saying it's the month of May. Look at how big this candlestick is, right? And we're literally what? 4 days into the month, right? And we know this is a monthly candle, so it can change form, it can change character, right? Don't be surprised if by the end of May, the last trading week of May on the Friday, this is now looking something like this, an inverted, upside down hammer or whatever, shooting star, whatever your patterns are. right? Markets could easily change from green to red. There's still so much trading time. There are about 20 trading days in a month, and we've just used about 4, and already this price is like that. Already we've got a wick here, already we've got an open, right? Remember, green means open, and a potential close, right? This could become something like this by the time the month is done, all right? But we're drawing our current Fibonacci, and right now I do not have a swing high, so this is not as accurate as it would be. It'll be better if we had a swing high like that. But right now I've drawn it to the maximum, to the distal line of this supply. You can see where there's a lot of indecision. This is a prone PCP area, right, where price could come and bounce back up, right? And obviously failure to that, then we start to look at full retracements, etc. So it doesn't look very promising right now. I'm happy to concede to that as a seller, but I wouldn't count the supply out just as yet. Yes, we don't like the type of distribution we saw on the bigger time frames, but at least for 2 months there was a little bit of a distribution. It's not the best distribution, but I'm sure it gets better as we scroll. So let's keep scrolling. There's no point in talking about any of these other zones until this zone here is removed. It's as simple as that, right? Because none of those higher supplies are going to matter right now until this zone is removed. And until it's removed, we have to assume that, you know, there's a plan in place, right? If we go to the weekly time frame, there goes our bearish engulfing pattern that is really in charge of what's going on. And then we can start to see, right, momentum buying setups, right? So this is what I mean by momentum buying, right? Instead of waiting to buy low, price has a base to build on, right? And those buys generally work. Remember the white fib line, very important. Remember the white fib line represents that 0.38 area, which we saw on the governing time frame was those doji, indecision candlesticks, right? So if we say we might get a full-blown retracement, it would go below. But look at this, bullish engulfing order block on the weekly time frame by a PCP area. Next bullish engulfing area by a PCP area, right? So momentum buying already, guys, has been preset. So just be very careful about that. And so we really want to see less charts so messy. Let's quickly establish, the tight. There's not much tightening we can do on this weekly supply, if I'm being honest. The zone is pretty tight. As is. You could look at this in principle, but anyways, price nonetheless has made contact with the area of competition, so we could leave it like that and see what happens. But if price is to fall, we at least now know where to take profit, right? We don't. I can't give you a long-term, position swing trade here. Like, get out as soon as you get involved with weekly demands, right? Maybe you get wicked in. This is the whole zone, but maybe you get wicked in all the way here. So if you're trying to sell, this is a place to look out for. Remember, your moving averages and indicators and all that kind of stuff are going to tell you to look up for some support there. And I'm saying we don't have a clean imbalance. That's not a bullish engulfing pattern, so don't fall for any specific traps. But if you do sell, get out here just in case, because there could be a lot of momentum buying that's been preset. And yeah, sure, markets are allowed to drop all the way down. Then you're looking at this area, which looks very congested, right? This is the white 0.38 fib area, right? So CAD pound, not my favorite thing to trade right now, but if I was to trade, I would sell, I guess, and sell carefully up until I got out on these weekly areas of value. On the daily time frame, when I'm looking at the daily supply area in relation to where price is right now. In relation to where price is right now, just excuse me for 2 seconds. What am I doing? Oh, I'm pressing the wrong thing. My bad. Right, there we go. So on the daily time frame, this is what it looks like, right? This is what it looks like. This supply no longer in charge. This was broken. And on that weekly time frame, on that which was that monthly supply, weekly supply, this is all we have to think about and consider on the daily time frame, right? So you can see why there's already a moving average support here, right? If markets move up one day again, one more green candle, then as even as 365 supply and demand traders, we now have no choice but to acknowledge this as a potential demand area for price, and then the selling now looks like that, right? So all you need to do is to know when to get in and when to get out. You get out at a true supply, you get in at the next demand, right? If you like the odds and if the risks a risk to reward ratio makes sense to you, then that's all you have to do. You simply take your profit, right? And if the sell doesn't hold, then we know for a fact that a governing sell has been removed, and now all you're doing is waiting for a good enough demand now that you can actually hold. All right. This to here, if you to take this upper sell there, just know is I'm not in it with you. It makes no sense. And if I am in it with you, then my goal is to hold it all the way there. But that's a feeling, right? I can't go, I'm gonna hold this sell through this demand. It's not yet a demand right now, but if we get an imbalance, just so we're clear, I can't use that. I can't say, no, I'm gonna wait for price to get to the lower demand. That's not how markets work. You have to trade what you see. If there's a demand in the way, then you have to get out, right? Otherwise, price will just retrace with you and potentially even take out your stop loss when you're holding a winning trade, right? Why I would hold all the way down to the weekly demand all the way here is because I would have seen coming back to this chart next week that markets came to this demand, maybe came back to the supply. As they were coming back down, markets created a new supply, removed this demand, count back to the fresh supply and go. Now I have room. I have room to come all the way down there, right? I literally can now justify why I am holding myself all the way to this lower demand, because I've waited for the banks to remove an area of value that the banks created. I haven't just assumed that they will, right? Assumptions is pretty much the death of most trading accounts. If you enjoyed this video, if it helped you, let me know by hitting the like. Please hit the like. Don't be shy. It costs you absolutely nothing, but it reassures me that I'm scratching the right itch. Like the information that I'm providing you is helping. Go 30 seconds in and just leave a comment. That's all it takes, 30 seconds, just leave a comment. I truly appreciate that, right? So look out for this sell area, see if it holds, and then be very mindful of what price is creating right now, not yet solid. If price does remove this, creates a supply, we call this a continuation type of sequence, right, where price goes down, then yes, I would love to be a part of any of these cells to this demand. This demand is more significant to me because it's a weekly demand. And then if I really see serious momentum on the daily time frame, remember, on the governing time frame really should be going down. But if I see some serious momentum on the daily time frame that markets might even come all the way down there, then I'll either hold or open a few more cells to support that, right? But I need the one trade to first decide. I need markets to decide, are you taking this out because you're taking out a governor, or are you, rocking the waves to a bit down before coming back up? Right. Wishing you well, and I'll see you in the next video. Peace.